Hey there, everyone. We're seeing that expected market settling that I've been talking about since at least this current week, although I think I started talking about it last week, that we would have some big enough catalysts coming our way that we should absolutely be paying attention to them, that they could put some downward pressure on the markets after we hit some key technical resistances. We'll take a look at the charts here. We'll look at SPY, QQQ, IWM. We'll also take a look at Bitcoin's important rejection that I've been talking about. Ethereum, by the way, right around that $4,000 mark. We'll see if it pushes down a little bit below that one. Said the market was probably going to be a little bit nervous. I think that's what we're seeing are those jitters so far. And it's up to what we see from initial jobless claims today, maybe durable goods. But then we also have tomorrow the personal income and outlays. I think the market is kind of worried about that as well. And then even bigger after that is what we see for the labor market reports. Plus, we have the end of Q4. There's just so much happening here. I think that it would have been difficult for the market to head back north. So let's take a look and see what's happening as I record this video. So the thing I said to pay attention to as we do that settling is this 13 EMA. I talked about it for the Qs. I'm going to keep that same sentiment there for the SPY. Watch the 13, watch what happens around it. For SPY, it's around 657.70. And as the market opens up today, that's going to change a little bit because it is a moving average. Doesn't sit in the same place. It goes off the last 13 closes, and not until 4 o'clock today Eastern time will we see it finally settle into a price. But it will be right around that 657-ish mark. For this, we could find some incredible support there, at least intraday, if we pull down that far and see a little bit of a bounce, and we'll see what happens beneath it. The thing that we want to watch out for is a push down below that 13 EMA, and then a retest up this way for resistance off of it. So if we get rejected at resistance, that's where you see that further fall. Now, some of my technicals popped up on the screen for you, and you can see a few things. One, you see a bit of that rising wedge pattern that we have on here. That looks like it's in a little bit of need of updating. There we go, but we'll get that settled for you. So this one, if you fall at the bottom of that, that would coincide with the 13. Watch for the retest. Maybe that shows us anything from 644 up to 653. That's if the market should happen to settle down. We have a lot of support there to catch us. So what does that tell us? Well, as long as the wheels don't fall off the wagon with the reports. So we see subdued inflation. That's good. Initial jobless claims being about as they have been. That would also be a good thing. Reasonable, durable goods where we don't see something negative there or very, very, very low. I don't know if you can have negative for that one. Maybe on a month-over-month basis, you can have less than what you had before. But then labor market reports next week, as long as we're not seeing signs that are going to point to recession or that we're seeing that we're very rapidly heading that way, we should be in good shape. So we want numbers as expected or better. And so that's what we're watching for. If it's worse than expected, then it's a question of, okay, well, how much worse than expected? Is it still pretty much the same, or is it much, much worse off than we thought? So that's why the market's so nervous right now. Plus, we have probably some profit taking for the end of Q4. End of Q3 as we go into Q4, and that actually sets up really good prices for Q4. If there's a lot of profit taking and we push those prices down end of September, early October, well, then that can set us up for a very nice November, December. But that's a bit far in the future for now. So what are we looking for in the Qs? Well, once again, we're looking to see, will we test that 13? If we do, we could see that push back upward. And then also down below that, I said about 582 to 583.69. So about a dollar range, 582.64 to 583.69. If we fall down through the 13, that's the next place I'm looking for off this bottom wick and off that peak that we have over there. If we push to the north, it's probably going to take some very good news to push us up higher than what we currently have on here, up in this red area of resistance, if you will. If we're able to push up that high, it's likely with some very strong news that we're looking at economic strength, that we're looking at easy monetary policy, that we're looking at subdued inflation, and that we're looking for a labor market that really is either showing signs of stabilization or strengthening. If we see things that are counter to that, things that point towards recession or further weakening, that's not great for us. So let's move over from there into IWM, which is going to experience things in outsized ways. So I talked about the outperformance of the S&P, and that's exactly what we saw this quarter. But that also plays the same the other way, that if we see any sort of pullback, it should be more exaggerated with the small caps because they're much more prone to that economic distress, or much more likely to experience the pains of that economic distress a lot sooner. They're going to be more sensitive to it because they're less insulated companies. Bitcoin, talked about the rejection off the 50. If we couldn't break up above the 50, we'd have a further push down. The 5 over the 50 was not a good sign. It was a bearish sign. Now we're about to get the 13 down over the 50. That can be even a stronger bearish sign for what we see. And it looks like we're starting to overcome some of that selling pressure. Watch the volume that goes along with it. That can tell us a lot more of what's happening. It seems as though as we make this move downward, we're still getting that tapered volume. But this is an early candle. This is not a fully formed one, which means it's not a fully formed volume either. So we're going to be on the watch for that to see what happens for Bitcoin. If the market sells off, if we have the stock market with an overall bearish bias that we're moving into more of a risk off territory, we can see it in Bitcoin. And you can look at something like a gold ETF like GLD that can tell you a little bit more of what the market's experiencing. And with the prices of gold being pushed up a little higher, that can tell you that the market is like, hey, you know, maybe we want to hedge away from risk and want to hedge a little bit more into safety. Gold also being an inflation hedge. And we can look at things such as TLT. There we go, tracking the 20-year, which is actually pulling down a little bit, which means that we're not in that full risk off territory. This is still sweating that US debt and what high inflation might mean, because that could be very, very bad for us in terms of bonds, because it eats away at the power of them, and then that can contribute to the debt crisis for the United States. Palantir pulling back as well. Nvidia also pulling back, and then when we go to our friend SoFi, pulling back also nearest every one of them near their 13 EMA. Just so you know, it looks like Nvidia is actually pulling down just a little bit beneath it as well, in this choppy range that comes across your screen here. bigbear.ai, what's it doing? It is messing around with this support area down here, and we're watching some of that de-risking taking place. And the penny stocks, if I click on penny stocks and you look over here on the right-hand side of your screen, you'll notice just how much red is there. The market, at least in the pre-market this morning, is really saying risk isn't really what we want right now. That's my take from what we're seeing, and that's that nervousness, those jitters coming into the market, that we will find some green areas today. There are places to find them. Some of the risk off plays are certainly there to help us out during that time. The gold stocks, gold related stocks, some of those inflation hedges, if you will, are probably going to do very well today as we get into that personal income and outlays. So watch for that risk off sentiment to take hold as the market gets a little bit nervous as we come up on those important economic reports. So we're in support for bigbear.ai stock down below that 669 all the way down to, what's that number, 620, a big fat area of support down here as well. So we'll watch what the market gives us. Right now we're pulling back about to the 5 EMA. If I take these down, you can see it more clearly. There's the 5 EMA. Right here's the 13. And watch for that. We had just a small retest of support back on the 17th for the 50, but we haven't touched the 5 or the 13 in a while. We'll see if we get that pull back down to that 13, which puts us right at that support area. That's what I'm looking for. The market bias is incredibly important to pay attention to. So if the market's going to continue to sell off and go risk off, the penny stocks are also going to be risk off. And you'll notice that is a flip-flop from where it was at before, when I said that the market was generally up and there was really no bad news coming for us, that we'd have a good week or two coming out of September. But as we got into that first week of October, as we got near it, the market would start to get more nervous. I think today we're starting to see some of that nervousness come in. So moving on from there, just into the quantum stocks, down a little bit. Some of my my watch now list is what it is. Lots of red there as well. And even if we go to the list of good companies that I have on here, red, go to quarterly performers, red. If we go to the daily movers, this is different. These are a lot of very volatile, mostly penny stocks that we have here. NVTS, still settling a little bit, heading back towards that 50 and 13. I'm absolutely watching for the 50. If the market's going to stay risk on, that's exactly what I want to look for in that low to mid sixes from where we're at right now. Will we find support there? If we do, that can be that next giddy up moment. And Beam moving a little bit down from yesterday's close. I still want to see it up above that 13-month and above the 50-week. If we can get above both of those, sit on top of them, I think that's where that next bullish moment can come in. So guys, it really is an exciting time that we're seeing right now. It really is a time that the market's being a little bit nervous, but it should set up our next opportunity. And when the market chooses a direction, and when it has conviction in that direction, that's when I really start to get excited about leaning in with more options. So call options to the upside for going along with those, or put options to the downside along with those as well. So long options mean I'm buying to open the position. Short options means that I'm selling to open the position. So it's a little bit different than going long or short the market. So just be aware of that there's that vocabulary difference between the two. I do have another options workshop coming up. I'll let you know exactly when it's ready, and it gets more into that sell side of options, selling to open, and maybe just a few of those early combination plays that we can do with calls and puts, or buying two calls, or buying calls, silently call, you name it. We'll talk about all that in the workshop. I have details coming out for you when I share it as soon as it's ready. Otherwise, guys, find me over the Discord, along with the other panel experts that are over there as well. The live trading that happens, the entire ecosystem that's there to support you in your journey towards financial freedom and building alpha in your portfolio. Thank you very much for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you next video.